Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Benuli. Today we have Charles Hugh Smith, author, leading global finance blogger, and America's philosopher, we call him. He's the author of several books on our economy and society, including A Radically Beneficial World, Automation, Technology, and Creating Jobs for All, Resistance, Revolution, Liberation, A Model for Positive Change, and the Nearly Free University in the Emerging Economy. His blog of twominds.com has logged millions of page views and is very high, number 7 on CNBC's top alternative finance sites. His recent book is called Pathfinding Our Destiny, Preventing the Final Fall of Our Democratic Republic. Welcome, Charles.
Thank you, Richard. I'm always impressed by your lead-in, and I don't know if I really match those high expectations, but I think we've got a great topic today, and we'll try to add some value.
Always meet and exceed the expectations. Your work is phenomenal. And so today, I thought we'd do a discussion on bringing together a number of pieces that you've written about on different types of trends that are happening in the economy, in the financial markets, in our society as a whole, and how it all gets dotted together. What are the linkages between them, and where is this all going? So we have a number of topics to discuss in this regard, but just from at the base, from the beginning, we see demographics challenges and debt exhaustion as two of the key trends happening. Can you elaborate on that based on your recent writings?
Yes, and just as kind of our context, that we're talking about here is demographics are obviously sort of like long wave or long cycles. In other words, the workforce can only go up or down, by so much, given that the people who are entering the workforce were born 20 years ago. So, it's not something like debt or GDP or something that it's not a statistic that's a financial statistic that can be manipulated or massaged. It's like, demographics define the society and the economy in a fundamental way. And so what people like Chris Hamilton, who's currently writing some great work on demographics and the economy, and people like Martin Armstrong and Peter Turchin, people with a long historical view, they all point to basically one issue, which is promises that are made by the government to the people in boom times. They cannot be met, once the situation starts stagnating. In other words, boom times go to low growth or slow growth or no growth, right? Because the workforce that has shrunken either due to reduced jobs or just the reduction in the workforce in terms of age, is that workforce is too small to support all the promises that were made to the pensioners and to the government's other programs. And so this shortfall in wages and profits that can be taxed, that forces the government into making some sort of adjustment or attempt to fill in the gap between what's actually affordable and what was promised. And of course, there's great political pressure to fulfill what was promised. So throughout history, governments have always tried to borrow money from the future in order to meet their obligations today, right? And that can work in a very short time frame. Like if you need to borrow money from next year and your tax revenues are going up next year, then borrowing a little bit from the future will be okay. But if your tax revenues and your overall economic picture is not growing as fast as your debt, then eventually what happens is where we are now, right? That the debt is growing far faster than the ability to service that debt. And so I call this debt exhaustion. Some people call it debt saturation. So what it means is then the government and the people start demanding even more adjustments. And as a result of it becomes visible that we can't meet the promises that have been made. So then the people start demanding that the government borrow more money and distribute it as universal basic income or some other kinds of programs. And the government starts looking at its trading partners and going, well, we need to get some more money out of trade. So then we have tariffs and trade wars. And I think what the linkage to me is every so-called solution to the problem that we no longer have the resources necessary to fulfill the promises that were made in boom times. Every one of those so-called solutions creates even more of a problem. And it usually ends up being expressed in debt and social or global discord.
Yes, and that's a theme there where there's a continuous feedback loop with government getting into more and more debt, trying to solve these challenges that happen. Even Illinois the other day, as they're going into more debt with all kinds of crises, pension crises. What is their solution? Well, let's create some more debt, and to try to buy some more time. So it's a continuous cycle, and more we get to this debt exhaustion phenomenon as you describe it. And then that's also all together with demographic challenges leading to essentially a crisis in government. And that's what Martin Armstrong has been talking about a lot recently as we go into 2020 in particular, where he sees a crisis in government, with government being the problem, more of a growing awareness that government is the problem. Alongside that would be a loss of confidence in government and government institutions. Your thoughts?
Right. Excellent. That's certainly a good description of what we're seeing already. And I would just want to add that one of the so-called solutions that the central state has attempted recently, which is manifested in the central bank policies as opposed to the treasury or fiscal spending. The central banks of the major economies have attempted to create new growth, right, or spark growth in a stagnant economy by financial repression, right, by forcing capital into risk assets and generating or inflating these asset bubbles, which generate a lot of basically phony wealth, right? I mean, the house is not providing any more utility value than it was before, but it was once worth $150,000 and now it's worth $900,000. And some of that is supply and demand and so on, but a lot of it is phony wealth that was created by financial repression. And so those people who own the assets that have been heavily inflated, of course, have benefited greatly. And the people who don't own those assets have not benefited from those policies, right? And so we know that it's a fact that roughly the top 10% of U.S. households own 90% of all financial and capital assets. And so, that concentration goes up to where, roughly 5% of the households own something like 80% of the wealth in the U.S. And I think that's paralleled in a lot of nations, especially in China, that the wealth is generally held by a relatively small percentage of the population. So that wealth inequality, which has been driven by central bank policy, then creates even more social discord because the have-nots look at these policies which are so blatantly unfair that they favor speculative capital over other kinds of capital investments and over labor. And so then they demand redress, right? Like so these are the demands for free healthcare, free higher education, debt forgiveness, universal basic income. And then the question becomes, well, how is the government going to pay for these trillions of dollars in so-called QE for the people? And, those demands, we understand where they come from, right? In other words, the financial repression does favor a specific form of speculative capital over all other forms of capital and labor. So it is unfair. And so people are responding to that unfairness. But how is the government going to fund that out of a dwindling tax base?
Yeah, and another example of that is how those that are close to the money, could be banks, are able to borrow from central banks at very low rates, 25 basis points, for example, and then turning around and buying bonds, paying, say, 3%, so you're getting 275 basis points essentially for free. Now, you and I can't do that, but those that are close to the money, the banks, in particular, commercial banks, are able to do that. And then there's a leveraging process as well that goes along with that. So that has exacerbated wealth inequality and income inequality.
Yeah, absolutely. And there's another mechanism here that, since we're talking about debt, and that as people's earned income has stagnated as a generality, at least for the bottom 90%, then they're borrowing more, right? And so we see people borrowing huge amounts of money for higher education, for college, and for vehicles that are now very expensive. 35 to 50,000 is not an unusual price anymore, as well as credit card debt. And so all this debt, whether it be public, private, or corporate, is actually sapping the ability of those entities to save and invest in the future, right? Because as more and more of your income goes to servicing debt, you have less and less to invest. And so depending on debt for like this sort of cheap, easy shot of growth in the present, it's actually strangling income and investment in the future. And so where does real wealth arise? It arises from increasing productivity. That requires massive investment in skills and equipment and other forms of capital. So if you're basically over borrowing in the present, to fund today's promises, you're basically strangling your economy's future hopes of generating higher productivity, because the money to invest simply won't be there. It's all spent on servicing existing debt.
And so instead of taking that avenue and the solutions that you've detailed in your current book, Pathfinding Our Destiny, Preventing the Final Fall of Our Democratic Republic, we seem to be on a different path, and that is towards populism, polarization, extreme political views in both directions, to the far right, to the far left, extreme type of suggestions like universal basic income, MMT, all requiring more spending and more debt, as you mentioned. And in particular, we see now movements to the far left as far as socialism is concerned, with the millennial Alexandria Ocasio-Cortez, and just recently Bernie Sanders announcing that he'll be running again for president. Your thoughts?
Yeah, and again, I think the core dynamic I see is the policies of central banks have increased wealth and income inequality. That's a reality, right? And so what's our response to that reality? And of course, for people who feel that the system no longer works for them, that they've been left behind, then they want some sort of redress. And so when we look at the popularity of Bernie Sanders and AOC and the Green New Deal, these are all attempts to redress this rising wealth and income inequality, right? And that's a understandable impulse, right? We all understand that. And it's not a bad impulse in and of itself. It's a matter of how do we reach that goal of leveling the playing field, of redistributing opportunity and capital more fairly than it is now. So what I think we're really facing is, how do we start living within our means? And that means demanding sacrifices of everybody in the system. And why there's a lot of resentment in politically now is people understand intuitively that a certain segment of the population that's been favored by central banks and financial repression, they haven't sacrificed anything. They've actually benefited enormously from these policies of asset bubbles and so on, and huge debt, huge accumulations of debt. And then it's everybody, the bottom 95%, who have had to make the sacrifices with higher inflation, higher debt, stagnating wages, and so on. And so I think we need a reset of the system where the solutions are not to borrow more through central banks and central governments, right? But more like decentralized, more flexible, more adaptable, more localized solutions that are more like focused on generating opportunities for everybody that's participating in the economy, and trying to find ways to lower costs as opposed to borrowing more money to pay, highly inflated costs for things like higher education and healthcare. So I think the solution set is to use innovation and innovative social policies to try to create a more adaptive, flexible, localized, decentralized economy. And I think that a lot of these problems will start melting away because it's a lot harder to manipulate and impose some kind of centralized privilege on a very decentralized system. And so these people, the AOCs of the world, of course, are seeing the central government and central bank as the source of the solution, where those of us from a little different point of view see them as the source of the problem that will never be solved by borrowing tens of trillions of dollars into the future, because that will eventually destroy the currency, and that impoverishes everybody, rich, poor, and the middle alike.
Exactly. Whether it be, increasing the size, complexity, and cost of government from the left or from the right, it's basically leading to similar end results in terms of loss of decline in standard of living, loss of purchasing power, and ultimately capital wealth drain and brain drain at the same time. And this has happened many times in history. So as you mentioned, the answer is more, as you've outlined in your new book, more of a limited, centralized form of government, more efficient, more increased efficiency, but at the same time lower cost of that.
Right. That's where, innovation is almost intrinsically deflationary, right? In other words, what was once extremely expensive becomes a lot cheaper once it's commoditized and innovations arise in both product lines and service lines. I want to mention real quickly, there's a lot of talk today about, trade and tariffs, right? Trade wars. But, I just want to kind of fit that into the puzzle we're assembling here, is that, again, as the economy stagnates, so does the government's revenues, right? And so the government is then seeking some redress, like some way to jumpstart the economy, or get more growth. And so, of course, then trade comes up, because if it seems that some other nations are taking advantage of your nation, then you want to eliminate that imbalance, if you will, and bring back some of the benefits to your own country, right? And so this is the basis of a lot of ideas about reshoring, the industrial base back to America, reshoring manufacturing, and so on. And this is understandable. And from the Chinese point of view, they have the same concern. They're afraid that if they lose trade, then their economy will stagnate, and they'll have all the same problems that the older Western powers are facing, because the demographics are not favorable in China either. In terms of the one-child policy, has created a much smaller workforce than the pensioners who are expecting the government to fund their retirement in China. So these are global issues, and that may be partly why we've got global discord.
Yeah, and I want to mention a book that also recently came out called The Prosperity Paradox: How Innovation Can Lift Nations Out of Poverty by Clayton Christensen. It's a fascinating book. I'm looking forward to getting a copy in the next few weeks here. But essentially, what he suggests is a better way of approaching innovation, using innovation to help build a framework for economic growth that is based on entrepreneurship and market creating type of innovation. So this is his solution, very in line with what you're saying in terms of more decentralized form of government, and being able to apply innovation. And I might add also that there's the new framework today in the economy called Agile is also a way to help foster this innovation that is more efficient, lower costing overall for government. So the application of agile agile technology to innovation, and this approach that both you and Clayton are mentioning seems to be the right way to go.
Right. And I guess I would sort of summarize that particular aspect of what we're talking about. As you hear a lot of talk now about capitalism has failed, right? And then we hear other defenses of capitalism. And of course, the root problem is we're using one word to describe two different economic systems, right? And so-called bad capitalism is there's a lot of that dominates the U.S. economy, what I would call the cartel state economy. In other words, cartels which then can raise their prices while reducing the quality and quantity of their services, right? So once you get a quasi-monopoly situation that's enforced by the state, you get bad capitalism. You get pharmaceuticals that there's no competition for, that they can charge $100,000 a dose, and so on. And that's bad capitalism. And of course, in other situations, bad capitalism includes crony capitalism, where corruption is rife, and where the sweetheart deals and sole bids for contracts and so on and so on. This is bad capitalism. It's not really the entrepreneurial capitalism that you are describing, where entrepreneurial capitalism is based on a level playing field. Everybody follows the same rules, and that there's open access to capital and labor, and there is competition, because competition is what keeps people honest, and it drives innovation, right? If you can just keep raising your prices while producing really poor quality, then you've got no motivation to improve your quality, right? So we've allowed a lot of bad capitalist situations to arise where competition's been stifled or snuffed, or and there's lots of mechanisms for doing this, right? You raise regulatory barriers so nobody else can afford to compete with you, and these kinds of things. And there's a lot of games in that involve the central state. And so, in other words, I don't think you can get the worst forms of capitalism and kleptocracy without a central government to enforce them. So when we talk about innovation and decentralization and agility, what we really want to see is a very limited form of central government, because if you allow the central government to get that much power, then they can enforce monopolies for their cronies, and this is what we see in industry after industry. And so, to have a level playing field, you have to decentralize power and capital as well as opportunity. So that's kind of the foundation to create an agile entrepreneurial societies. You have to have a level playing field, like enough regulation to make sure that you don't get overwhelmed with a monopoly that ends up being enforced by the central state. And you want opportunity to gain capital, that's broadly distributed. And so a centralized model just really reinforces bad capitalism, and a decentralized model reinforces good capitalism.
And your final thoughts on how can we get there is the question. Do you see this as happening through a crash and burn type of scenario, or is there a better way, sort of an easier way to get there from point A to point B?
Well, I wish there was.
Yeah.
but Peter, actually, Richard, it's a great question, because we've referred to Martin Armstrong, and I often refer to historian Peter Turchin. When we look back at history doesn't have many examples of a easy, peaceful transition from one sort of social economic order to the next one. And so history suggests that we're going to have to go through a period of turmoil and discord that will see a reset of the system, where the system breaks down. And I think what we're talking about today is a system where debt will reach levels that are unsustainable, and that attempts to service that debt and expand that debt will destroy the fiat currencies that people depend on. And that will be the crisis which enables a reset of the entire system. But it's going to be painful for sure.
Oh, and on that note, great. We'll end our discussion for today, but that's great insight. Charles, how can our listeners learn more about your work?
Yeah, please visit me at of2minds.com. You can download free chapters of my last couple books and look at my archives, and I hope you find some value.
Great. Thank you very much, Charles.
Okay, thank you, Richard.
The FRA Roundtable Insight Show is for informational and educational purposes only, and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors, which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.